Fed wasn't dovish, Fed wasn't hawkish. Fed seemed confused yesterday, but we had an excellent response from the markets, and in today's video, we will talk about what this means for the markets and Bitcoin. My name is Kyle, and I'm a Coinex ambassador, and if you like this kind of content, please subscribe to the channel and smash the like button. We had a big FOMC meeting yesterday. Fed leaves interest rates unchanged with no change in the dot plot either. The forecast ending 25 stays at 3.9%. But when we see the projections of the economy, we have worrying signs. GDP is lower, unemployment rate higher, PCE inflation higher, and core PCE inflation higher too. In the Fed statement we can read, uncertainty around the economic outlook has increased. And Powell said yesterday, tariffs tend to bring growth down and inflation up. So what he's saying here, he's sending a tough message to the White House and its policies. And follows, Federal Reserve doesn't need to be in a hurry to adjust interest rates. If we have a worsening economy and inflation, why would they cut rates twice this year? And that seemed very confusing to me. But that is not the part that got the market excited. Let's talk about it now. Yesterday morning, the markets started to rise. And why? Nick Timiraos, a journalist from Wall Street Journal that covers the Fed, posted that the Fed could pause the quantitative tightening. The Fed slowed down quantitative tightening last year in order to let that process run for longer. Officials are considering another tweak due to implications of the debt limit situation. And guess what? Hours later, in the Fed statement, beginning in April, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities from 25 billion to 5 billion. So, this is not the end of quantitative tightening. This is a pause. And that excites the markets. And why is that important? Quantitative tightening is when you take money out of the market, tightening economy, reducing risk appetite like Bitcoin and stocks. And Fed is doing quantitative tightening since 2022, tightening the markets. But now, Fed made technical decision to slow pace of declining balance sheet. But the most important question now is, why Fed is doing this, pausing quantitative tightening exactly now? Since the inflation is still a problem and the economy presents new risks. We need to remember that US has a huge debt and it has reached its limits. Therefore, it cannot increase spending without congressional approval. And now the government is starting to spend its TGA, Treasury General Account, with kind of savings in a rapid pace. So, to avoid this kind of problem, the Fed found a solution in the quantitative tightening pause. But in my opinion, the situation is still complex, and the Fed is trying to buy time until new data emerges. But let's talk about positive things. Markets love money, especially Bitcoin. We can see here during the quantitative tightening that little new money was created, and this was reflected in the price of Bitcoin that is not skyrocketing like in previous cycles. But what if the money come back to the markets like in 2020s or 2017? Where would price of Bitcoin go? So we can expect not to be in this phase of the cycle, but in this one, waiting for the last big high of the cycle. But wait, our dear friend Peter Schiff doesn't seem to think like us. Attention Bitcoiners, you guys are running out of time. Real gold is in and digital fool's gold is out. You fail to recognize this shift at your own peril. In fact, gold is reaching all-time high day after day, which is very good. But if we think that Bitcoin is a digital gold, eventually Bitcoin will catch up gold. And not only this, but BlackRock's head of digital assets says about Bitcoin, institutional adoption still isn't reflected in the price. After 5 weeks of outflow, this week kicked off strong with the highest daily flow over a month. So institutionals are buying ETF Bitcoin again. And we can see here President Trump's executive director on digital assets. We talk about ways of acquiring more Bitcoin in budget neutral ways. We want as much as we can get. And our savior, Michael Saylor, just said, Bitcoin will rip forward with a vengeance when risk-on returns to the markets. But before we look at the Bitcoin chart, I invite you to Coinex. It's a very simple and easy platform. Has the largest number of cryptos, values your privacy, and does not require KYC. So let's dig into the graphic. But first, I need to say, despite of the Fed-driven rally, I recommend caution to you, as Bitcoin have a lot of work to do before resuming the bull market. Let's see. In the short time, we have lots of resistance above the price. We have a super resistance over here in this region. Bitcoin is now fighting with EMA 200, and after that, we have EMA 50. And we have a trend line over here, a lot of resistance above the price. And we don't want to buy resistance, we buy support. So this is a place I will not open a long position, because the most likely result is finding resistance on this region over here, and we will find some support in lower levels. But where would be biggest support that we can find the bottom if Bitcoin wants to fall more? The weekly chart is showing us good signs. First, we have find bottom here on EMA 50, and during this bull market, every time we touch this EMA, we find a bottom. So it's a positive sign. But if we cannot overcome this resistance here in 90K, the next phase, of course, we need to find a support, and we can retest again this EMA 50 and this place over here. But however, the strongest support, in my opinion, is in this range over here, 70K. The 70K could be the strongest support for Bitcoin. And I'm not saying that Bitcoin needs to fall to 70 to find this bottom. I'm saying that we need to be prepared for different scenarios. And if Bitcoin goes to this range over here, we have an excellent buy opportunity. On the other hand, every time Bitcoin touches RSI in 44, we are find bottoms in Bitcoin. Let's see here, when we touch 44, it was the bottom. Again, we touch 44, the bottom in Bitcoin. And again, we just touched this level of 44. So we have positive signs for our weekly chart on Bitcoin, but on short-term charts, we face lots of resistance. So that's what I'm saying. In the short term, lots of resistance. In the long term, we have good signs to resume this bull market. So that's it for this video. I hope you have enjoyed. Don't forget to smash the like button, and see you in the next video.